Hello, everybody. This is episode 15 of the Real Estate Braddahs. We're going to try and go over some Hawaii real estate news and some national news. Thanks for joining us.
In Hawaii, there's so much to do. There's hula, there's surfing, and real estate too. We just two local guys with so much to say. So listen to the Real Estate Brothers today.
A little bit of housekeeping. This is being recorded live on Facebook, but you guys are not being shown to protect your privacy. If you guys would like to ask a question, there's a question and answer box. You guys can type in questions. Dean will be managing that throughout the presentation. But how about we get started with this? So we've been at this for about 15 episodes so far. So we thought it'd be a time to go Facebook Live with this. And here's a disclaimer. We are not giving any legal, investment, or tax advice. Please consult your qualified attorney. If you don't know any, maybe reach out to us. We'll give you a few referrals here or there. But hey, Dean, why don't you go and introduce yourself, and let's go over some of the local real estate news.
Hi everybody. I'm Dean Ueda. As Lane had we mentioned in the past, my experience is 18 years as a CPA, and now I'm a full-time realtor and investor. You can reach me on Facebook at Dean Ueda, Hawaii Realtor, and I'm also on LinkedIn, Instagram, and YouTube. Yeah, let's start off with the April Wahoo statistics for the real estate market. This information is slightly dated. Actually, May information will come out tomorrow. So maybe next month we'll go live, or we'll do episode 16 1 or 2 days later, so we can use fresh data. But just for information purposes, it's still interesting when we're talking about April stats. Looking at single family median prices, we have a slight decrease to 766,750 at 3% decrease. Closed sales volume actually went up to 318 units and increased 10%. And days on market also jumped up a big 47% at 25 days. Median condo, we saw a slight uptick, not really much, at 418,950. Closed sales volume decreased at 467 units, and days on market jumped up from prior year at 61%. I think
It's been about like 3-4 months of this kind of trend, right? Like, I think it's officially a buyer's market now.
Yeah, I mean, it's definitely looking that way. We have the active listings on both sides for single family and condo going up 31 and 18%. So it's definitely giving the buyers leverage. That's no doubt. And especially, what's another good thing is interest rates are also at an not all-time low, but it's, I think, 17-month low since like November 2017 now. So yeah, its leverage is swinging. It's the shift is definitely real. So it's a good time for us buyers. So, and as I mentioned, interest rates have been the lowest since, I think, November of 2017. So as you can see, Mortgage Daily News is a site I like to go to track interest rates. And also this decrease in interest rates is also starting to create like another small boom in refinancing for some people. I think in the past, I know before, lenders would say, any difference less than 1% from what you currently have in terms of your existing rates is not worth to refi. But that was back in the old days. Now we're at such low rates that I think it's a different story in terms of when to refi from what you originally have.
Yeah. I think I heard that same rule, but you know how rules are. You got to just do your math yourself.
Well, I think you're looking at it comparatively. In the past, we had such high interest rates, and now we're at like below 4% for the 30-year conforming, right? So that's if you look at it as a percentage of say, if you're at like 4.5 or something, and that difference is proportionately big if you're talking about 0.5% now versus 0.5% when you're at like 10%. So yeah, I would, doesn't hurt to talk to a lender. I mean, to find out, how much it'll change your monthly. Um, the
Yeah.
only junk thing about that, I would say, is, if you have 20, 15 years left, try not to go into like another 30 year. But I guess it depends what you're trying to do with your cash flow too, right?
Yeah, it depends on your strategy, right? I
Yeah,
mean,
exactly.
I'll say it because I know you don't want to say it, but every broker, lending broker is going to want you to get a new loan, right? So they can
Right,
pick up that 1-2%
right, right,
origination
right.
fee, so they can buy a nice Camry or whatever they want to buy. But
Yeah, and I
if
think the
you're
refis they probably just I think they roll the difference into the loan balance, right? So
yeah,
you might,
it's not a zero cost. It's not a no fee thing. They're
yeah,
making theirs. They're just stuffing it. They're just what you're doing is they're just giving you a higher interest rate.
yeah. So I would definitely do your homework, but it doesn't hurt to do your due diligence. Yeah.
Yeah, probably ask the ex CPA, right, to do the
Yeah,
numbers for you.
yeah. I love talking to clients and investors on what their situation is and trying to see what works best for them. But just to segue into next thing is
What the heck is that? That's not Kapolei, is it?
so that big thing. No, that's Atlantis. So I wanted to tap into Kapolei just because kind of like a neighborhood spotlight. It's kind of exciting times for that area. Kapolei, Eva Plains, and Ko'olina side. Definitely signs of growth. We have Marshall's just opened up, I think, this last month, I think, out there. Also, we also have the big mall Kamakana Ali'i. That's great. That's it's new for the Kapolei area, but it's awesome. Straub and Kaiser are opening up clinics and medical buildings out there. Um, Inspiration Furniture, they're planning to open up a big warehouse. There I bring up Hart and the Rail, but they're starting off right in Kapolei as one side of the island. University of Hawaii West Oahu is growing. I think they just got like a $2.5 million grant for their STEM programs. And then, of course, for government wise, we have the federal, we have FBI, the city and county and state have their existence out or presence out in Kapolei town, yeah, in terms of their departments out there. So good sign in terms of businesses and jobs.
Yeah,
And one of
I don't believe it. I'm always gonna be a Honolulu
no,
guy.
I mean that's true, but I mean our island is so tiny and we're just getting squished here, right?
Yeah,
And so I mean they're not building anything really on the east side much, and then I mean Kaka'ako is getting built out. That's for another discussion. But exciting things on the west side still. The biggest I think the Atlantis Resort. So the big Chinese developer, China Ocean Wide, bought some land right next to Aulani a few years back, and I think they just got approval for the water and wells permitting in January, but it's expected to be a $1.5 billion project, and they're saying it's twice the size and scope of the Aulani um, facility, which in my mind means more jobs and sustainable
yeah.
economy. So
And
it,
in my mind, it's more timeshares, right? Because you're saying they're almost done with the Alani timeshare selling that stuff. Yeah,
yeah, they apparently they're I don't know if it's a 1 or 2 years out. They're kind of done selling in that for the Aulani portion for the Disney is what I've been hearing. So
yeah,
rates have been going up for us non-timeshare owners trying to get into the Aulani hotel.
yeah, yeah. I'm not an advocate for timeshares, but
I'm not either.
yeah,
Um,
friends don't let friends buy timeshares.
but do your research. Maybe it works for them because some of it's not financial, right? It's not 100% financial. I mean, it's some people really love Disney, and you can go to other. Um,
Yeah, I think the one situation where it works out if you're like kind of like cheap like me and you never want to spend your money and you got to kind of force yourself to go on family vacations, that
mhm.
definitely forces you to take the family once a month or whatever it is. So
That's true. That's true.
sometimes that's more important, yeah, than the money.
That is a good point. Yeah, yeah. So another thing we like to look at when we're talking about neighborhoods to invest or to live is school districts, right? So I just put this off of greatschools.org, and whenever you're in a newer neighborhood with newer infrastructure, the schools are newer, the resources are newer, so a lot of times teachers like to the good teachers like to flock, to the newer schools. But do your own research. But I just put some stats in terms of
What's that worst one over there? The 3 out of 10.
Barbers Point. I'm not sure, but it's in Barbers Point housing,
Okay.
so that's military.
I think that's where my mom taught, Barbers Point Elementary.
That's why you brought it up. Huh?
Yeah, but when you go to this website, it's all relative, right?
It
It's not
is. It
like
is.
a eight here is by no comparison to an eight on the in nicer areas of LA.
Yeah, that's why I mean, like, do your own due diligence. I like to talk to the actual school teachers, and get their candid input. I think that's the most reliable in my mind in terms of where's the good teachers and where's the good administration, because with solid administration comes the good teachers. Yeah, so that seems to be something. Um, for just for investors, I ran a quick pro forma, I guess, or just an example estimate on rent to meter for a 3 bedroom single family in Kapolei, and so we're about 2,800 in terms of average and median rent rates for that area.
You
So
got the pro subscription to this thing?
I did, and that's because I I'm constantly pulling rent rates for my other rentals across the states.
Oh, okay, okay,
Yeah,
yeah.
because I
Because I
think
know we have that Facebook group, and I think our other buddy Brad was doing it for like $20
oh yeah,
for it.
you just ping me. I can run it for you because I think you're only allowed like 5 rent rate pools before they stop you or something, right?
Oh, but you get unlimited with the pro, right?
Yeah, and you can run like CMAs and all that fancy stuff. But I
Cool,
just use it to I use that along with other resources to try to get a legitimate rent rates. Of course,
cool.
your property manager, right?
So if you guys, myself as Lane Kawoka, I used to be an engineer. I still have my license. No bridges have fallen yet. Um, I run a podcast, Simple Passive Cash Flow. You want to check that out on Google Play, iTunes. If you guys want to text ebook to 587-317-6099, I'll send you the free e-version of my book. But yeah, let's go over some national news here. So the big one is the China trade. So what's been going on here is it's kind of like Star Wars. If you saw the Phantom Menace, how they were kind of blocking trade routes. So Mr. President Trump raised tariffs on Chinese imports, increased that from 10 to 25%. And China's kind of doing the same thing, but right now it's sort of like a head-to-head hunger strike, and the U.S. should prevail because the China's economy isn't doing as well. They were building a lot of stuff to you can kind of glue all the ghost towns there.
So it's kind of like a back-to-back posturing until one of them taps out.
Yeah. So a lot of, I mean, I had an economist on my podcast, and he does a lot of like predictions for Wall Street firms. So he is kind of saying right now it's like a lot of posturing, and China is going to lose. But we're just trying to figure out how China is going to save face, because we all know Asians, right? It's like you got to save face. That's like Japanese people, they do that whole suicide thing because they want to save face, right? So it's just a matter of not like when this is going to happen, but there's going to be some kind of a China trade deal done, and that's when that gets done, supposedly that's going to be a big stimulus for the economy to hit its second win here, and maybe President Trump will likely get reelected because of that. But in the meantime, there's a lot of volatility, and we don't know if that's going to happen. That's just sort of a prediction.
Oh, so maybe is that the long play on the stock market then?
Yeah, well, I don't like stocks
I know.
personally. It's
I
all
didn't want
made
to
up
go there.
money, but I'm just trying to just keeping the good times rolling, right? Not too high. We don't need 6, 7, 8% rent increases or increases in prices, but just the steady, just keep it going.
Yeah.
So this is just sort of I follow a lot of multifamily apartments. So this is just sort of a viewpoint of how much the caps rates have been changing over the last decade since the last recession. The cap rate is your rate of return without leverage. So if you went and you bought these large apartments or properties without a loan, you'd get about here 5.39% in 2019. So it's steadily been coming down as the economy has been getting stronger. And you can see the blue there, that's the 10-year treasury rates. That kind of goes hand in hand with, what people pay for their mortgage interest rates. I look at all of these reports and I'll put them into these future monthly installments. But here's another chart that I like. On the y-axis, you have your year-over-year jobs added. So those are more your jobs growth. And then on the bottom, year-over-year employment growth. Sort of two, you'd think those two kind of go hand in hand. But this, ideally you want to be on the upper right. And so Dallas are all the standouts. They've been kind of the shining star of the nation for the past 5 years. Orlando's there, and you see the San Fran, Seattle's. But again, I don't invest in primary markets. So the way I read this is I like Houston, Atlanta. I don't really like Phoenix because that's typically where a lot of dumb money California investor types go.
So is the goal to be in the, so like Dallas, would you say that's kind of petered out already? We people that are going there might have missed the boat, or?
I think so. A lot of your semi-sophisticated money has kind of moved into Dallas as of a couple of years ago.
Mm-hmm.
Still there's jobs moving there and there's increasing population, but I just tell people most people don't know what they're doing in terms of underwriting, and just underwrite it the right way with 2 to 3% rent increases per year. Don't assume 5 or 6, even though that's happened the last few years.
Right.
So there's your Las Vegas there. It's growing, but I would say that's where a lot of Californians invest, their dumb money in there. Not to say that you can't find a good property. We'll end up here with a couple of Hawaii news. So another affordable housing units, $250 million. By the time this gets built, it'll probably be 20 units. No, that's a joke, but I guess they're always doing stuff like this, right?
Yeah. Well, Kekulani Courts, that's in Kapolei.
Oh, okay. There you go. Are you gonna move down there? Seem like you're bullish.
No plans. No.
Too hot. And the company that owns the Hilton Hawaiian Village, they recently got acquired to go to an even bigger company as part of Park Hotels. So, everybody thinks these hotels are local. They're not local. They're owned by big companies from the mainland, part of big holding companies. So,
yeah.
But if you guys like this and want to come hang out with us, we do some happy hours here and there. This green screen in the background, I can go anywhere. So this little vibe here, we kind of hang out, we drink some beers, we hang out. It's more for passive investors, not really house flipping types to come and hang out.
Oh, I thought you were at the beer lab and everyone is just keeping really still in back of you.
No. It's noontime on a work day. Everybody's hard at work today.
Oh, yeah.
But we also do the Breakfast Club for out-of-state investors. If you're interested in investing on mainland, I always say that the best thing to do is get around people that you're interested in. And I'm also taking people up to the mainland on July 21st to the 24th. I'm going to go to Atlanta, Birmingham, and Huntsville. If you're interested in that, shoot me an email at lane@simplepassivecashflow.com. And that would be probably a fun time.
Yeah, that sounds fun. I wish I would have joined you if I could, if I wasn't going to be away.
Yeah, you got more fun, important things to do. Sponsor the show, rialoha.com/food. But let's open it up. Are you seeing that question and answer? Diltine, is there anything in there?
I don't see anything right at the moment. If you guys have any questions, type it into that Zoom webinar chat, right, Lane?
Yeah.
Yeah, right now we don't have, but I do have a question from our last seminar that I could address. I think at our last investor seminar, Lane, that we did at the Keller Williams Honolulu's site, one of the investors had asked how, I guess, in terms of, is it a good time to invest now? They wanted to know what was the last time we had a correction in the real estate market in Hawaii, how much it actually went down.
I got done, yeah.
So yeah, so I think we all had our estimates, and I remember in a prior meetings, one of the realtors had thrown out 7. I forget if I said 13, but I pulled the statistics, well, the median prices from the Honolulu Board of Realtors, and it was an 11% drop. And that was from 2007 to 2009. So it was 11% for single family, and I think this 7% was for condos. So the last real estate correction in Honolulu, if you're going based on median sales price on Oahu, it was a.
But that's the key, right? Like median is just sort of the average. You got to look at it like based on what you're doing. Is if you're
Right.
average people houses and Mililani or
Yeah.
Kapolei,
Yep.
it'll be a little less than your luxury.
Yep.
Stuff.
So really, that's based on island wide, and I mean it's just like if you're looking at the Dow, when you're looking at how that's adjusting it. Real estate is local, so it's gonna differ, but just for a very high level, I guess, answer to benchmark. Say if you're looking at how the stocks adjusted, or how compare it to how Vegas or Atlanta corrected at that same time after subprime, then it just gives you like a real general, I don't say macro, but like a higher level view of what happened. So yeah, it's 11 for single family decrease and 7 for condos on Oahu,
Right.
which is relatively low in my books compared to the other areas in the nation.
Right. So we got 5 more minutes up to the time limit here. If you gotta get more questions, type it in. But I've got another one here that we forgot to talk about at our last workshop that we had. But we do these. We'll start to try and do some of these investor workshops once in a while. Probably I probably won't do any in the summertime because I won't be here very much. But probably we'll get started again in August, September. So that question was, what program should I pay to get more education? Would you take a stab at that one, Dean?
Oh, that's interesting.
I mean, how did you get started investing out of state or just in general?
I didn't pay for any program, to be honest with you. I was fortunately to link up with guys like you, and just kind of struggled through the first few, and yeah, tried to network with people here and also on the mainland, and just to me, how we always talk about your net worth is your network. So it kind of showed even more to me how true that was, going through these years of investing. But I haven't really paid for anything for investing that I can think of. Yeah.
I'll say when I first got it started, you read a lot where they say go to the local RIAs, but I found that was some of the absolute worst places to go for being a passive investor. I just, at the time I was in Seattle, so I would go to these things. I don't know, maybe because I was just a young 20-year-old kid who looked like 16 years old, but I just got like a really slimy feeling from everybody, and then I realized most people who go to real estate clubs are broke, right? That's why they're trying to go there to get unbroke. So I always tell people, try and get around people who are higher net worth, that are kind of doing what you want to do, and that may not necessarily be wholesaling or flipping. It's just buy and hold, and then the magic happens when you can kind of, like how we connected. Like somebody is investing in Kansas City or Birmingham, you can kind of just tag along, buy them lunch, and then maybe they'll tell you who they use for property managers, etc., that kind of stuff.
Yeah, that's good advice. Yeah, I mean, there's a plethora of information now online, and like you said, books. I like the setup that you got going, in terms of your groups to meet up with. I like breakfasts. I like beer, so or dinners or whatever. So I like your meetups a lot, and your mastermind too is when I was part of that. That's awesome. Yeah, talk about like getting around like-minded investors. Yeah, and they who is it? Jim Rohn said you're the average of the five people you hang around the most, I think. So there's a lot of truth to that, and like how you said, you want to be around these people, know how they think, so that you can get to the next level or wherever you're trying to go. Yeah.
Yeah. I've got a bunch of investor questions here, but do you wanna any client questions you had come up this past month that you kind of wanted to go over? I can pick another
Uh,
investor question if you.
I can't think of any offhand. You can start yours. See if I can think of any. But yeah, go through your questions. I think that'll be fine.
So I think I this question comes up a lot where like you got a local guy in Hawaii and they have a lot of equity in their house. I know you've done the HELOC before to put equity out of that. But what are you kind of telling folks these days in terms of like what do you do with the equity?
Um, well,
I know you get a lot of people they hear about this using the HELOC to pay down debt. I don't really like that strategy, and you can read all about that at simplepassivecashflow.com/HELOC. But what are you telling your clients for that stuff?
it totally depends on the situation. I think in terms of what their cash flow looks like from their jobs, and then like you said, kind of like what kind of equity you have and how is it truly tied up. So I think every situation is so different, and the other thing is risk tolerance and the the age of the investor or the owner occupant and where they're trying to go. So I mean, it's interesting times, right? If they're trying to get their first investment versus their 10th, it it totally differs. I still like, for me personally, I'm still trying to leverage and leverage wisely in cash flowing assets. So I am using HELOC funds, and I have HELOC funds ready to go and pull the trigger. I think for me, when I'm looking for investments now, you know how you showed that cap rate slide and how the cap rates have been declining, right? So deals are harder to come by, and so what one thing I tell investors is, don't when you need to, don't force it, and it's a long-term game. So if there's something that looks good, don't fudge the numbers. Don't try to get this property because you know you bid over because there's a bidding war and you really want it. I mean, um, mine is just like, it'll come. So put in an offer that makes sense to you, and don't go chasing things too hardcore, because um, you know when if and when the correction happens, it's then you'll be ready to pull the trigger. Yeah, so be
Yeah,
lock loaded and ready for that. So
because
but
you're still using your HELOC, right, from the primary residence or
yep,
the rent? Are you using HELOC from the rentals?
I have not yet. I was looking into that for one of them, but loan to value is a little, the underwriting for the HELOCs on non-owner occupant um, leverage is a little bit tighter for the
Yeah, you
HELOCs.
need like 70. They only give you up to 70%, right? Whereas the owner occupied is 80. I didn't even see 90.
Yeah, some places 80, 90 for the owner occupant, but I've been quoted like as low as 60, 65 for the investor HELOCs.
Yeah, and those are Hawaii banks you're using, or
It's depending. So of course the local stuff is Hawaii banks and brokerages. The mainland stuff I was using regional, national, and local banks depending on what state I'm playing in. Yeah.
yeah. So if you needed like 50 or $100,000 of down payment money for an amazing deal that pops up,
Then my
would you,
my
would you
HELOC
yeah, would
from
you get the
my
HELOC from the rentals or would you get a new loan on the primary residence or get a new loan on the rentals?
right now, for me personally, I'll be using my HELOC from my primary residence.
Okay. And then
That's me personally.
and then once you exhaust that, what's the next step?
The next step, well, it's a good question. I'm hoping not to exhaust that too soon, but
Well, if you do, that's a good news, right?
yeah. Um, I kind of don't want to, right? Because I always want to have, like I said, I want to be lock loaded and ready for the correction. Um, but the next step could potentially be tap into equity from other, um, from some of the investments that I have more equity in,
Yeah. So
potentially.
the taking the HELOCs out of the rentals then.
Right. Yeah.
Okay. Interesting. So not you're not going to go get a new loan based on this latest dip in interest rates. Then.
Well, some of my debt is relatively new, and then I think I have the so like a lot of the HELOCs is all promo rates. So I'll go for, instead of going like for a 1 year or 2 year, I'll get like a 3 year promo rate, just so that I don't have to try to go jump around every year or every 2 years. So I just
Oh,
and
okay.
actually I hear that there's a local credit union that's offering a 5 year promo rate for the HELOCs at under 4%, I think. So I was like, maybe
Oh,
that
okay.
might be the next play. But yeah,
Oh.
just yeah.
Well, yeah, shoot that over to me because I'll add it to that cheat sheet we have. I think it's raaloha.com/HELOC. So we got
Sounds
like a
good.
little cheat sheet with all the
Okay.
promo rates. Or maybe we'll post it in the Facebook group, the RA Aloha Facebook group. But
Sounds
I think
good.
we ran up to the time limit here. People are probably done eating lunch. Any last parting words, Dean?
I just wanted to
Yeah.
thank everyone who tuned in, and hopefully we added value to their lunch break. And if they have any topics they want us to cover, just email Lane or myself, or shoot us a note on Facebook, and we can try to cover it next month. Yeah.
Yeah, and Dean is going to be giving away a $20 gift card if you friend him on Facebook and write a comment on the post for this, and then maybe in the next week he'll reach out and we'll share who won, just so that we're not just making this stuff up.
Yep.
All right, all right. Talk to you guys later. Bye.
Bye.
Free real estate investing group, check out reialoha.com.
We're just two local guys with so much to say. So listen to the real estate brothers today.